Should we buy or sell oats? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So oats is one of the grains. We don't get any data here from Refinitiv. Here you can see that oats is down minus 37% year to date, minus 8% over the last year, but up 57-ish% over the last 3 years. So we will look at the futures. There is a grains ETF called JJG. The problem is that that one contains corn, soybeans, and wheat, but not oats. But yeah, so we have to look at the futures. So these are the weekly data points. Red 200 week moving average is a huge deal. It was very, very much a good support level back here. Easy buy, easy buy, easy buy. We are relatively close to that super important support level. So let's just measure how close we are. So last week we were almost 2-ish% away from it, and you can see that some buyers stepped in here. So it's not like back here where you have like a clean test, but we are super close. So in all likelihood, the bulls will buy that moving average, given that we have seen it work so well in the past. We have also fallen from a very high level now, so a lot of the froth that we saw up here has been, priced out now. So we are approaching a level where you could argue that there's value. So here are the daily data points. Yeah, we are below a lot of moving averages yet, not at horizontal support either. If we look here at the RSI and the PPOs, I mean, look at MACD here, we're just extremely, I mean, the sell-off has been very substantial. Looking at RSI, historically speaking, this has been a relatively buyable level. We had the same RSI level back here, very good time to turn bullish. If we zoom in a bit like that, we had the same RSI level back here, also a very good time to turn bullish on oats. And yeah, around here as well, also very good time to turn bullish on oats. And looking at the 20-week PPO here and also the 50-week, we are very, very abnormally low. Daily data points reinforce this general message. The bears have just been very ferocious, but maybe they have been so ferocious in their selling that they have created a dangerous situation for the bears, similar to how bulls create a dangerous situation for bulls by pushing oats into super overbought territory here in late 2021 and early 2020. So I give the bulls here a 6 on the technicals, and it is all based on 200 weekly moving average support. If we do not get support at that super important moving average, then that is obviously rather bearish. But the primary assumption now, given the context, is that the bulls in all likelihood are going to rush in, and the bears, they will only get even more aggressively short if we were to see the 200-week break. So let's look at seasonality. So to the right here, we do get the Oats Futures. So in red here, over the last 10 years, very bullish seasonality all the way into 12th of October. In blue here, over the last 7 years, green over the last 5 years, from the 8th of August leading all the way here into mid-ish October, the seasonality is very favorable for Oats Futures. That's interesting. That's rather bullish. To the left here, we got the grain index. So oats is one of the grains, but this is the entire basket, as it were. So over the last 5 years, August is a weak month for grains as such. The last 10 years here, August is weak, but September and October are strong. And over the last 15 years, August is weak, but September and October see increasing bullishness when it comes to grains broadly. The most important seasonality we got here was, the clean seasonality from oats as such. That seasonality was just very bullish. So I give the bulls a C here, a 7 here on seasonality. A lot of good stuff happening for the coming months. I give the bulls a 4 here on fundamentals because of how the sell-off now has created a situation where there's more value. Not that far back, we did see substantially higher prices, and we also see that we have priced out a lot of that massive spike, after the war began. But you could make a very strong case that the sell-off now is sort of going a bit too far, similar to how the rally got a bit too far. So yes, I do think that we are approaching a value territory. So let's look at relative performance. We do have 80% positive here with the S&P 500. So why don't we get data here for the DBA? Here we have the data. So 89% with the agriculture ETF. Then we do have 83% with the grain ETN. And then you do have 24% positive with the dollar index. Short term, 57% with the S&P 500, 49% with the agriculture, 23% with the grains ETF, and minus 65 with the dollar index. So looking short and long term, the strongest correlation we do get is with the DBA. So what happens with the DBA is very likely going to affect oats. Yeah, so in this case, the chart is messy because we have seen a pullback, we have seen a bit of a bounce. But you could argue that we do have a very rounding topish pattern, which is a bit bearish. Looking at the daily data points, it's a very messy chart. You have a death cross here with the 50-day crossing below the 200-day moving average. So let's look at the last time that happened. That was back here, and that was not good. Let's look at this, the prior peak we saw here. Here we also got a death cross and a more protracted sell-off. Yeah, so the death cross does have a bit of a tendency to be an omen for this ETF. Here is data from the other indicators. Yeah, accumulation distribution is a bit mediocre. Here is the relationship between oats and the agriculture ETF. You could definitively argue that we have fallen down to a horizontal support-ish level. So definitively let's keep our eye on that, because we have retraced this entire rally. So all of that has been given back. And if we look at some prior times where we had a retrace, like this rally was completely retraced here, but that also formed a low where we got a strong rally. And you can see here that this rally here was then completely retraced before we got that other rally. Looking at RSI, the previous time we had this RSI level was back here, and that formed a very key long-term low in this pair. So basically, there's reason to expect a protracted period of oats outperforming the agriculture ETF. Looking here at seasonality in green over the last 5 years, 7 years in blue, 10 years in red, the seasonality is very favorable for oats, leading all the way into the 6th of October. Okay, so 6th of October. So a protracted of oat outperforming agriculture. So yeah, definitively bullish. Let's look at the DBA against the S&P 500, and we start here with the weekly data points. There are some people who like to analyze the monthlies, but I think that is just way too big of a picture. Because the moves that happen on the monthlies are just percentage-wise very, very big. So if you were to trade off, like, say, the 20-month moving average as support resistance, then the move could be just huge. So you would have to operate with monster stops. So yeah, here is agriculture against the S&P 500. We could potentially form a bit of a messy inverse head and shoulders pattern with a very broad head, and this hypothetical shoulder here to the right. So that would be bullish. Now let's look at seasonality. Does that corroborate that thesis? Yeah, so in red here, over the last 10 years, we usually see agriculture outperform into the 6th-ish of August. No, of October. Okay, so 6th, so from the 6th-ish of August until 6th-ish, 7th-ish of October. So that's a very protracted period of outperformance. In blue, over the last 7 years, it's a bit weaker. In green here, over the last 5 years, it's a bit difficult. It's a bit flattish. I give the bulls a 6 here on relative performance. So we end up with a 5.8 here in favor of the bulls, which is definitively a very strong score. The super important signal is the 200 weekly moving average support in red. Given all the data we have found, we definitively expect it to hold. So notwithstanding the other bullish data, it is important to have some kind of entry signal and stop loss level, simply because if the 200 week does not function as a support now, then that is a very bad signal. It could mean that there are bearish factors that go far beyond all of the data we have now looked at. So yeah, support should hold in a good context. If it doesn't hold, then there's something else, some X factor that is more powerful, and that is something we just don't want to deal with. And we definitively cannot fight some mysterious X factor. So we have some time left, so let's look at some other agricultural commodities. So let's look at the hogs. Yeah, so let's look at let's just look at the So yeah, here is the Wisdom Tree Lean Hogs ETF. Hogs is the ticker. A bit of a buy signal here on the MACD, here on the weeklies. You see that the red 200 week moving average, it's been very important for the bears. The bulls are playing around above it a lot more than they have done ever since back here in 2014. So there is a bit of a change here that is definitively something to keep our eye on. Yeah, so overall that's just bullish. Let's look at here is a live cattle futures. Yeah, in this case, we have been able to break out above some previous highs. We are now trying to break out above some other highs as well, those highs back here and here. So I mean, a breakout is of course bullish, but the best time to play a breakout, that's if you get in early, because then you have a bit of a buffer. Here is orange juice futures. This commodity is very fond of these time cycles, so they do have some reliability to them. So if we take these time cycles, at least since 2005, they have been relatively tradable. The time cycle suggests that we do have a declining phase leading into April of 2023. If we go all the way back here to 1984, we see that the vast majority of time we have had prices below the current level. There have been some spikes above, like back here in 2016 and 2011 and 2006, but those were very temporary. So this looks a bit so basically we could have a bit more rally left in orange juice futures, but the track record here from a historical perspective is that it could be that last euphoric push, because this commodity moves up, down, and also it basically has a lot of volatility. So yeah, whatever you do, of course, you definitively want to go to diamondarm.com to get more data, and be market neutral. Let the trend be your friend, and always use a stop. If you read the Market Wizards books, which is full of interviews of the best investors of all time, they tell you clearly that you must use stops. Also, Warren Buffett, the primary reason why he became so wealthy is because he knew when to get out of a position that didn't work out.